Hello friends, Bharat Electronics Limited is the market leader of defense sector in India, and based on my analysis, I believe that this company has good potential to give high returns in the future. So let's start the analysis of Bharat Electronics Limited. Hello friends, my name is Karthik and my mission is to spread the knowledge about the world of commerce under one umbrella, which is Combrella. So friends, Bharat Electronics Limited, or in a short form BEL, was established in the year 1954 in Bangalore, and it is a Navratna public sector company, which means it is the second list of companies which is the best performing government companies. The first list of good performing government companies are known as Maharatnas, and the second best government companies are known as Navaratna companies. Okay, and government owns 51% of the shareholding in this particular company. So now let's understand the business of this company. So Bharat Electronics Limited manufactures state-of-art electronic products and systems for the Army, Navy, Indian Air Force, which includes defense communication products like radios, base stations, repeaters, satellite, naval and tactical communications. It also has different types of radars such as surveillance radars, fire control radars, weapon locating radars, and so on and so forth. It has also developed Akash missile system, which is a surface-to-air missile designed to destroy targets in the air. It also has air defense control and reporting systems, simulators, and many other components and devices. So basically, all in all, it's a defense electronics manufacturing company. Also, I have given the link in the description if you want to know more about its product portfolio. Okay, apart from defense, friends, BEL has also diversified into various other areas like e-governance solutions, wherein it has developed electronic voting machines, point of sale machines, okay, also EV charging stations, network and cyber security, railways, metros and airport solution related products, telecom products, medical electronics, and the list goes on and on. But though it is into non-defense sector also, but primarily its business is into defense manufacturing, since 78% of its revenue is derived from defense sector. Okay, it also has 9 manufacturing units in India, friends, namely Bangalore, Ghaziabad, Chennai, Pune, Navi Mumbai, Machilipatnam, Panchkula, Hyderabad, and Kotadwara. So this is the basic business background about the company and a brief introduction about the business and its company's operations. Now let us understand, friends, about the industry and the macroeconomic factors which affects this particular industry. So friends, there is a rising concerns of national security due to conflicts with Pakistan, China. Now Taliban has got also added into this list. So hence this sector is going to be hot for next few years surely. Okay, and the Indian government has set a defense production target of $25 billion by 2025, which also includes $5 billion of exports by 2025. Okay, $25 billion roughly includes, if you translate that, would be 1,75,000 crores of Indian rupees. Okay, and the government is taking several initiatives to encourage domestic manufacturing and reduce its external dependence. Okay, certain initiatives are like, for example, the automatic route for foreign direct investment in defense sector has been increased to 74%. In June 2021 this year, our defense minister Shri Rajnath Singh invited Swedish companies to invest in the defense corridors in Uttar Pradesh and Tamil Nadu. In October 2021, again this year, India signed contracts and cleared projects worth rupees 54,000 crores in less than 1 month to enhance the military capability and Indian armed forces, weapons and various other ammunitions. In October 2021, again this year, India launched the Agni 5 missile. There are plans to establish defense parks in Kerala, and the defense ministry has also set a target of 70% self-reliance in weaponry by 2027. So a lot of churn is happening in this defense sector, friends, and with a lot of government efforts and initiatives, this sector is surely going to be hot for the next couple of years, as I said earlier. Hence, if you're a strong believer of defense theme, defense sector, and if you're really interested in this particular sector because of the situation like that is such around, then I think the BEL, Bharat Electronics Limited, is the best company which you can invest, because it is the market leader and it is well poised to harness all these advantages which is right now happening. So friends, now let us look at the financial and fundamental analysis of the company, which is the most important part of this video. So friends, if you see the revenue, the core revenue of the company, which only excludes scrap sales and certain other small revenues, okay, the core revenue of the company for the financial year 2021, that is financial year ended 31st of March 2021, was 13,850 crores, okay, and for the last 5 years the revenue has grown at a CAGR rate of 9.27% for the last 5 years. The PAT, profit after tax, for the company for the financial year ended 31st of March 2021 was 2,100 crores, okay, and for the last 5 years the PAT has grown at 6.63% CAGR. So friends, you might be asking me or thinking, अरे यार मैं बोल रहा हूँ this is a very good company, this is a market leader in defense, पर यार ये revenue और PAT तो इतना कम ही grow हुआ है, right? But friends, let me just show you the growth rate of certain other companies which are into the same sector, that is its competitors and peers. Then you will realize why this company is a market leader. If I take you to another company, which is Bharat Dynamics Limited, which is also a government company into defense production, the turnover last 5 years turnover CAGR, the growth rate has been negative 17%. Okay, the profit after tax last 5 years growth rate has been negative 13%. Okay, let us see Paras Defense, okay, which just came out with the IPO recently, with a bumper IPO. Last 4 years for Paras Defense, the growth rate in the turnover, okay, has been 0.04%. PAT growth rate negative 10%. Let us look at Hindustan Aeronautics Limited, another government company. 5 years growth rate of revenue has been 4.91%, and 5 years growth rate of PAT has been 4.33%. So now if you see friends, that is why among all these companies, BEL has actually given a higher rate of growth, and whether in terms of revenue or profits as compared to its competitors. And also if you see friends, Paras Defense came out with a bumper IPO, and with all these situations, and this is kind of a sign that this defense sector is poised for a good rate of growth in the coming future. Okay, now let us look at some other points for a financial analysis. The net worth of the company on 31st of March 2021 was 11,000 crores, and last 5 years growth rate in net worth is 7.4%. EPS of the company for the financial year 2020 to 2021, okay, is 8.62 rupees. Last 5 years growth rate is 5.71%. The order book of the company as on 31st of March 2021 was 53,000 crores, which translates to 3.86 times of its revenue of 2021, close to 4 times of its revenue. So which means that the company has good visibility of its future revenues, and demand is very high for this company. So there is a good roadmap or a path for the company for the next 3 to 4 years easily. Okay, now one of the most important factors while doing this financial analysis I came across, friends, is that the company is a debt-free company. So which means it has zero long-term borrowings and as well as short-term borrowings, zero debt. So friends, as the time goes and the company starts improving its profit margins, you can start seeing that in the company's results and profitability because of no debt. This is a very big factor for company's financial analysis. Also friends, the current ratio of the company is 1.41 times. Okay, it's neither very high, neither it is very low. It is decent level, optimum level for a current ratio. Okay, now let us look at certain other parameters for a financial analysis. Okay, the operating profit of the company for the year 2020 to 2021, operating profit was 2,800 crores. Okay, which is the operating margin, which is 20%, friends. Operating margin 20%, really good. I would say really good operating profit margin for the company. And for the last 5 years, the average operating profit margin, the average is 18.66% of margin, which operating margin it has got for the last 5 years, 18.66% friends. Okay, then let us look at the two other important parameters, ROCE, which is return on capital employed, and return on equity. Return on capital employed for the year 2020 to 2021 was 27.86%. Okay, and last 5 years average return on capital employed is 26.5%. Really good ROCE, I would say, friends. Return on equity, ROE, for the last year 2021 was 19.85, close to 20%. And last 5 years average ROE is 19.34%, friends. Again, a really good, fundamentally strong company. Now let us look at its free cash flows, friends. Okay, the free cash flows for the financial year 2020 to 2021 was 4,625 crores, and last 3 years the free cash flow has increased by 80%, friends. 3 years CAGR, because before the 2 years, last 3 years, before these 3 years, the company was having actually a negative free cash flow. So from negative, then becoming positive, and last 3 years it has grown at 80% CAGR of free cash flows. I think it is really commendable. Free cash flows, debt free, good operating margins, is a really good positive sign for the company. Now let us look at this year, current financial years, 21-22's performance up till 30th of September, 6 months ended 30th September 2021. For the 6 months, the revenue of the company is 5,300 crores. Okay, and the last year, September 2020, it was 4,871 crores. And even if you take one more year before, thinking that okay, maybe in COVID the company's business was down, but it was not down actually. Even if you take 1 year before, 2019 September, revenue was 4,873 crores. So current 6 months, the company has improved its revenue from the last 2 years. The profit of the company, PAT, for this 6 months ended September 2021 is 623 crores. Previous 2 years was 443 crores and 541 crores. So company has actually improved its financial performance in the current financial year also. Now with that, the strong fundamentals of the company, let us now see what are the rewards which the company has given to its shareholders, because that is the most important. Okay, so if you see the dividends declared by the company, friends, the total dividends, okay, the dividend for the year 21, okay, March ended 21, was 975 crores worth of dividends declared, and last 5 years the growth rate in dividend is 14% CAGR, friends. Okay, this is the total gross dividends. Now let us see the dividend per share declared by the company for last 5 years. For the year March 21 ended, dividend of 4 rupees per share. Before that 2.8 per share. Before that 3.4 rupees, and before that 2 rupees per share, and before that the 5th year I would say was 4.95 rupees per share dividend per share. Okay, so on an average the company is declaring 3.43 rupees dividend per share. The company has declared on an average for last 5 years. So friends, the dividend yield of this particular company is not very high. So don't invest in this stock for dividend yield. Invest in this stock only for capital appreciation. Okay, if you're very much bullish on the defense sector theme. And dividend is like only an extra income or a bonus which you get from this particular share. Let us look at now other rewards which it has given to the shareholders. Okay, the company has given 2 bonus issues. One in 2017, in which the bonus issue was 1:10, wherein it gave 1 share if you having 10 shares of the company. Then in 2015, it gave a bonus issue of 2:1, which means if you are having 1 share, you will get 2 shares of the company in 2015. Also, it has done a stock split in the year 2017, wherein the face value was splitted from 10 rupees to 1 rupees face value. Also, it has done buyback of shares, 2 buyback of shares in the recent past, one in 2018 for 372 crores and one in 2016 for 2,171 crores, friends. Okay, and if you see the market capitalization of the company, overall market cap, right now I am shooting this video on 12th of December. Okay, but I would take the closing price of 10th of December, Friday. The market price was 206 rupees. Okay, and the market price and the market capitalization is around 50,121 crores. Okay, friends. And if you see the last 5 years, the market cap, the rate of growth in market capitalization is only 8.27% CAGR, last 5 years market cap growth. So it has not like extremely given high returns, but right now, based on my analysis, I think based on the current economic situation, this company will not give neither multi-bag returns like 3x, 4x, but it can give decently 10 to 12% returns short, in the next couple of years, surely, next 4 to 5 years, surely. And this company is like an HDFC bank of the defense sector because it is a market leader. So 10 to 12% growth if you want in your investments, then defense sector, then I think this company is very much poised to give you that. Now friends, let us come to the conclusion of this particular video. If you see friends, and we'll just see the valuations of the company. Okay, the PE ratio, the last 12 months, the trailing 12 months PE ratio is 24, okay, which means it is neither too very expensive, neither too very high, neither too very low, okay. And generally the market tends to always discount the public sector companies. It is not valued highly by the market. Hence the PE ratio is always on a middle range, especially for this particular company. 24 is neither too very costly, neither too very low. It is a good, the PE ratio is very much fine. So you can actually consider investing in this company if you're a strong believer of defense sector. This company is a market leader based on all the things which I've said about the macroeconomic outlook, company's financials. This company, in my opinion, friends, can give you good returns in the future. So I think you can think about it, do your own research, and I hope this video will serve as a guiding tool for your investments. So thanks for watching this video. I hope you all liked it. I will see you all in the next video. Until then, this is C.S. Karthik signing off. Thank you and Namaste. Jai Hind.